I think when Ronaldo moved to Real Madrid, there was an insurance on his legs for 100 million. This is going to be a very long conversation, right? And I'm really happy to share these thoughts. So insurance really is a risk management tool. It tries to restore you to the point where you were before a loss. In fact, insurance also protects somebody who is not a party to the insurance contract. 5 times 12, 60K times 5 again, that's 300K, right? Is that computation correct? Mr. A has cancer. They've told him that he has less than a year to live. And then the next thing is, I have to buy insurance.
If somebody wanted to get into insurance somehow, take care of their property, whatever it is they own, what's the first step they should take?
But the first thing you need to do is to SS1 when we're doing the commerce subject. You know, I happen to be class rep, so I don't know the kind of school. Maybe you guys went to the very highest of ends, the schools of those high ends, but I attended the regular government school, right?
Yeah.
So and then teacher typically just sometimes they just give you the note to copy, and then whenever they are available, they come and explain. So that's really the first time I came in contact with the word insurance. But the industry itself, it was 2017. So I relocated NYSC to Lagos. And luckily, I was posted to an insurance company. The first question they also asked me is, what do I understand by insurance? I was like, okay. I had to reminisce back to my SS1 days. So really, that was my first contact with the industry.
So in layman's terms,
Yeah.
what does insurance do for a random individual that just owns a business or has a job?
There is risk in everything we do as human beings. So you're coming to this place today has some inherent risk, right? By nature, it's not you that placed it there. So if you are driving, there's a risk that, God forbid, you are involved in an accident.
Yeah.
Right? That is inherent. But how you then manage the risk, you probably will never be able to eliminate the risk of accident, but you will try as much as possible to minimize the impact if it happens, or try to avoid it happening. But it doesn't mean you can eliminate it entirely, right? So insurance really is a risk management tool. It tries to restore you to the point where you were before a loss. So if you are involved in a loss and you have an insurance cover, that's why they call it cover. It's like an umbrella that covers you when there is rainfall or you are avoiding the sun, right? It doesn't stop the sun from happening, from shining, or the rain from falling, but it tries to, your legs may be wet a bit, but overall, you don't get wet altogether.
To mitigate the impact.
Yeah, that's insurance for you.
Is there anything? What are the things that insurance cover from our day to day? So what things does insurance cover, or what does it not cover?
You can look at insurance from 3 broad prisms, right? So there is general insurance, like your house, your vehicle, your business, and there is life insurance, right? And then there is health insurance. These are the 3 major areas you would consider insurance from. So for a general insurance, just like the word implies, it's an insurance cover that broadly covers every aspect of daily lives, businesses, belongings, right? Properties. Think about anything that does not involve health or somebody losing their lives. The difference between general and life insurance is that the event that triggers the policy term for a life insurance is mostly the ultimate price. That if somebody dies. But that is not the case for general insurance, right? So, and that's now what brings us to the concept of insurable interest.
What is an
That
insurable interest?
exactly. That concept is what drives an insurance policy. I mean, there's also an insurance act in Nigeria. So it's not just the random business that everybody it's for you to even practice insurance in Nigeria, you have to be licensed. There is a regulator.
So insurance is law.
Exactly. It's a legal contract, right? Between party A and party B, right? In fact, insurance also protects somebody who is not a party to the insurance contract.
How does that happen? Give me a scenario.
Great. So in Nigeria, by law, you hear people say maybe you are driving and then police stops you and say, "Where is your insurance? Where is your vehicle particulars?"
Yeah.
The one of the very few things they ask you is, "Where is your insurance?" When they say particulars, they look for driver's license, your what's it called, roadworthiness, your what's those plenty documents you get in a car.
Let's say car registration.
Exactly, and then they ask you for insurance. So by Nigerian law, there's what they call third party insurance for vehicles. If you don't even want to buy insurance, you are mandated to have that. What it means is that if you, as a vehicle owner, is driving and you inadvertently hit or damage the property of someone else, that insurance policy is supposed to cover that loss on that person, not you.
Okay. So if I hit somebody with my car, like
Yes.
it happens a lot, you hit somebody from behind, you
Yes.
back into somebody.
Yes.
Your insurance is supposed to cover that person's loss.
The third party insurance policy,
That is in the paper, car papers that all of us have.
yes, that everybody have. So that's the thing. If
Why?
you have a vehicle today, except it expires, it's for a year. But if you have a vehicle today, the point where you are, because the guys at the what's it called, ZVIO or that do vehicle registration, their insurance company have persons there that as you are registering your vehicle, you are. Some people do not even know that that is part of what they've paid
That's
for.
what I'm saying, because a lot of time that thing happens.
You just think that it's a paper, no, right? It costs you somewhat around 15K for that cover, right? So if you happen to accidentally hit somebody's property, it covers life as well. If you are driving and God forbid you hit someone and they died, that policy
Should cover.
could. I mean, there's no price for somebody's life, right? But we all know that the person's family might come around and say, "Hey, you hit my son, my daughter, my child."
And insurance is made to mitigate the effect, not to replace.
Yes, not to replace exactly, right? So that is what the third party policy offers to you. There are several other forms of third party policy that is not related to vehicle, even in the professional space. So you are a medical doctor, you are a what's it called now? You are an architect, you are an engineer, you are a nurse, you can even go down to say you are a dry cleaner, right? You handle people's property,
Clothes,
or for in case a dry cleaner now, I'll just use that as an instance. So you have business from people and maybe you are ironing and then one Alaji's Agbada got burnt. Alaji say my Agbada is 200K, 1 million, you have to replace it. There is an insurance policy that is meant for all those. They call it professional indemnity, even though it is tailored to real-time professionals. So if you are a medical doctor, um, so you hear people say, I went for an operation and somehow the doctor left a syringe in my body. I'm suing you for damages, right? These are the things that I mean, the customer is not a party to that insurance policy.
but they get to benefit.
They get
if they
to
have a loss.
yes, if you have a loss.
So I have two questions.
Cool.
First one. This means it is not only limited to actual professionals.
It is not actually.
It's anybody that has, whatever profession. And then the second one, how do you then claim it?
Just like everything, right? You need to be able to prove the genuinity of your loss, right? So when you are driving and somehow you hit someone I get to see a lot of people before you even blink, it has turned into a fisticuff. People already start
Yeah.
fighting. Hey, how could you hit my vehicle? You know. But if you are involved in an accident, say any form of loss, you should be able to document it. Documenting means taking photograph, making recording of the event, right? And then most insurance companies have dedicated channels where you can report claims, right? So when you report a claim, the first thing, or when you have a loss, like I said, the first thing is to document it, take a picture, not just of your vehicle. In this case, let's use vehicle for an instance, right? Not just your vehicle. And then when you are making photographs of a vehicle, now every vehicle is uniquely identified by their vehicle registration numbers. So if you just take the body of how do I know this is your vehicle?
You need specific
So
proof.
you need to ensure that while you are making those evidences, you should capture that vehicle in areas where the vehicle registration numbers can be visible. So I see that this is KSL ABC 257. Do you get?
Yes.
The same thing applies to the other person that maybe you have hit their vehicle. If you are able to do that, it reduces the back and because people just do not know this, and when they have a loss, they just come and say, I have a loss, and then you cannot prove that you have a loss. And then when it doesn't go through and it looks like, oh, these guys have scammed me. Because you have to be able, even if you go to court, you have to prove that this event happened. And if you can't show it, then how then do you get indemnified? Right? So claiming is heavily reliant on proof, evidence, and how well you are able to provide that evidence. And then people try to profit off insurance. It is not for you to profit, it's for you to be restored. It's not a gain mechanism. If it's a gain mechanism, that's gambling already. I think there's something that a lot of people do in Nigeria. Before you bought an insurance policy, you were fixing your vehicle at Wasiu's workshop. And then you are involved in an accident. All of a sudden, you are going to Agbomagbe or Elizade to fix your vehicle. And then you are bringing a bill because you now know that you have insurance. They are able to, they have long check.
Exactly.
Right? So when the insurance company fights back and say, where have you been fixing your vehicle? Yeah, show us evidence that you've been fixing your vehicle with Agbomagbe. You are not able to provide that, and then there's a problem. Right? So because what people do is they will go and bring that invoice, and then when you pay them that money, they take it, they withdraw their vehicle and go back to Wasiu. So Wasiu charge them maybe 300k out of the 1 million you've paid, and they've made a gain. I'll give another take now, right? So we've been centering on general insurance.
Yeah.
If it was a life claim, insuring your life means that the only time that insuring your life means that you are not going to be beneficiary of that policy.
So you put somebody as a beneficiary when you're insuring your life.
Because you said you are insuring your life, it means that except you die, that policy doesn't come in force. People would then take life insurance by you are mandated to have you must name a beneficiary because that's the concept of life insurance. Although there are riders that you can include, you have things like permanent or temporary disability.
Okay.
Right? The ultimate term of a life insurance is loss of life. But things happen that can incapacitate you. So it could be an accident and you lost a limb and you're no longer able to fend for yourself. That can be added as an added benefit loaded into your policy, right? In recent time, there have been cases where loss of job has been loaded into a life policy as well, right? So you have a life insurance policy. It means that if Mr. A, let me use Mr. A, let me not be saying you. So if somebody has, Mr. A has a life insurance policy, that policy come in force if Mr. A dies. Now you ask me, what if I know I'm already going to die? Should I go and buy life insurance?
Yeah, like somebody who has terminal illness.
Exactly. No. Like I remember, it is not for you to benefit. It is purely a risk. Insurance company is not, I mean, insurance business is not gambling. I put in 2 million, I get 10 million. No, it has to be contingent on the crystallization of a risk. So you already know that, God forbid, Mr. A has cancer. They've told him that he has less than a year to live. And then the next thing is, I have to buy insurance. So businesses have what they call, in layman terms, thresholds, right? Depending on the value of the policy, they can subject you to medical examination.
Okay.
So if you say I want to insure my life for 1 billion today, nobody would gladly, because they think of it as this is a claim waiting to happen.
Yeah. So the less likely the insurance company is to pay out, the more likely they are to accept your policy
Not
or to approve your
necessarily.
policy.
No, every business, they are happy to have any business. What they are not happy to do is to take business that would potentially mean problem for them.
Then,
So if you are already I don't know, there's insurance is about probability of the risk happening. So the less likely the risk happening, the less the premium you would even pay.
okay.
So, for instance, if you come and say, I want to insure this chair that is over there against breakage, the insurance company would assess the probability of this chair breaking. So, if this chair is on the road, it means that there are more chances of it breaking. But if it's in a secluded place, it means that there are less chances of it. So, a chair on the road and a chair in the house will not be the same premium, even though they are exactly the same chair. Right? So, for a life insurance, it has to do with age, lifestyle. Because when you fill that questionnaire, they are going to ask you, do you smoke? Do you drink? Do you do that?
Yeah.
Because all of this thing increases your risk factor.
Mm.
So if you are an 18-year-old person who doesn't smoke or drink, right, versus a 40-year-old person who's an alcoholic or a heavy smoker who has maybe one form of illness already, and you come for life insurance, the premium will be A and Z.
The premium
Very
is the
different.
pricing, basically, right?
Yes, it's pricing, but there are factors that drive it.
So, what is the price range for insurance? Say, for example, a typical example is somebody who just finished. Myself, let's say I just finished school.
Cool.
I'm doing NYSC. Forget, I know they told us there's some NYSC insurance. Let's leave that.
Oh, there is one like that.
Yeah, they say something like that. So,
Oh, great.
Anyway, if there is somebody my age,
Yeah.
I run a business, for example.
Cool.
So I'm not in any system in terms of work.
Yeah.
I run a business and I'm 27.
Okay.
What is the range I'll be expecting to pay if I'm trying to insure my life?
There's a point you have not added. And let me add it. Everybody values their life differently. I can tell you my life is just 5K. Someone else can come and say their life is 1 billion.
Yeah, but how does the company see it?
It is you that determines the value of your life. It is what you determine that the company runs with. The company doesn't tell you your life is 50 million. I believe you guys are football fans. I think when Ronaldo moved to Real Madrid, there was an insurance on his legs for 100 million. So if you had broken Ronaldo's leg in 2009, Real Madrid would claim for 100 million. It doesn't mean that my leg is not 100 million. It's the valuation that you place on your life that the insurance company runs with. So, but that value that it is going to be, your premium is going to be dependent on that value and a number of other factors like age, lifestyle, right? And if you live in, say, in certain very rough areas, that can also be a factor, right? So you live in a place where they are reported 10 persons have died every 2 weeks. It means that if you want to go and insure your life, the insurance company will ask, where do you live? And when you mention that place, they tick a box. How old are you? I am 50. They tick a box.
But the question there
is no fixed price if that's what you are trying to ask.
Not what they will pay out in the case of somebody's demise. That's what
I'm trying to explain.
So
there is no fixed premium. Where you might find a fixed premium is a pre-priced plan. So, for instance, you see things like, for instance, I do not want to make this any player's business, right? Because I'm not here to represent anybody. Some organizations might have a fixed plan. So whether you are 100 years or you are 10 years, you can buy those plans and the benefit is the same for everybody.
What are those like?
So for instance, the first that comes to my head now is say an accident policy. Some organizations have what they call an accident policy. The benefit is fixed, the premium is fixed. So that's like a pre-planned policy, right? And for a pre-planned policy, because it's pre-planned, it's accommodating everybody. It means that the benefits would be capped at somewhere so that even if it happens, it is within their risk tolerance level, right? So a case in hand, organization, you say, okay, I have an accident policy, and irrespective of your age, if anything happens to you, your beneficiary will get 1 million, 500K. Irrespective of your age, your premium is 5K, 10K.
There's
Do
an
you get?
insurance policy on the head of coppers for life.
Okay,
And I think it's 1 million to the family gets if you die in service.
exactly. So
There's
that's a good example of a pre-priced policy.
there's something I've seen
Yeah,
happen before. So there's somebody that had claims.
yeah,
You know, Kachi is an issue. And so there was a time she was handling one issue at a time, and she was saying this particular man, this is the third time in 9 months he's coming for a claim. So what he did was insure his father, his father-in-law, and his
I
mother-in-law.
know what you're talking about already.
And so they were just dying.
Very
I
possible.
mean, and he was claiming and claiming.
This is going to be a very long conversation, right? And I'm really happy to share these thoughts. Insurance is not such that if you have a loss today, that's the end of it. It is usually on an annual basis, right?
Okay.
In that 12 months, 365 days, loss can spring up that you didn't plan for. All you need to do is be genuine and document them. Somebody can be, somebody can, I'll give you an instance. If I didn't work in insurance, they might also suspect me. There's what we call a property, it was a property insurance. So that it takes care of, so if you are a tenant, household items, and then any other thing that you want to add. So you can assume that your laptop, your phone are part of your household items, right? So I bought that policy. It wasn't even up to a week. Lagos boys, they took my phone. And then it looks like this things had already happened before I even went to buy the policy.
Because it was quick.
Do you understand? And then I had to report the claim, and they'd be like, your policy just started last week. Like, what happened? Happens. And then if in 2 days' time my laptop fell and broke the screen, I will still report it. My policy is for a year. So somebody can insure their father, their mother, the wife's father, the wife's mother.
And it's not malicious. It's just
a string of events, the father died. Same year. The wife's mother died. Same year. Yes. It's not impossible.
and it's not illegal as well.
It's not
That's what it's there for.
That's that. So when you buy that policy, you will specify the conditions of benefits. So some people can say maybe at the time the person was buying it, they only have a father. There is no mother. So of course you cannot include your mom who is no longer there. So you specify so because those persons are not the beneficiary for that type of policy that you've mentioned. You are buying it. It's usually around funeral. So there's even a policy for funeral. You just put it there and say, God forbid something happened to my parents. I need this XYZ amount for their funeral, and then you buy a policy for that. Okay. You can include your spouse's parents. That's a policy you're talking about, right? So it happens. It's as long as it's within the policy tenor.
If somebody wanted to get into insurance somehow, take care of their property, whatever it is they own, what's the first step they should take?
But the first thing you need to do is to reach out to an insurance company right? There are several ways to reach out to an insurance company.
You can just
Most of the
Google
insurance
insurance company in
companies are
Nigeria.
on the have a website. You can go on their website. Um, if you already have something in mind, or you are just blank, you don't know anything about insurance, you can seek the advice of a broker or an agent, right? Or if you also contact the insurance company, they can educate you on the various insurance plans that they have, and then you can decide to take one that best suits your need. And then when you get that, they will then issue you a quote. So a quote is you giving them the things you want to insure, and that would comprise their value. So if it's a life insurance, I want to take insurance on my life. I would say I want an insurance on my life for 50 million. That's what you want them to pay your beneficiary in your demise, right? And then if 50 million is below the insurance company's threshold, they will accept it and say, let's go. If it's above, they tell you, hey, we need to subject you to medical examination, right? But they are the ones that determine what threshold they like. And then they give you a quote. That quote contains the amount of premium you are going. You just see there. They won't tell you how they got that computation.
Okay.
But before you do that, they would have given you a proposal form that you would fill. That would say they get to see your age, and this is if it's a life policy. You get to see your age, some lifestyle questions. Do you smoke? Do you drink? If you smoke, how many sticks of cigarette? If you drink alcohol, how many bottles per day? Do you have medical history of A, B, C, X, Y, Z? And when you check those boxes, it gives them idea of what risk factors you are exposed to, and then that drives your premium.
And you pay your premium monthly. Oh,
It depends. A typical insurance policy is an annual policy,
okay.
right? However, some organizations give you that leverage to pay monthly.
Okay.
Other organizations have also devised a way to make it very easy for you. So it can come as a savings plan. You are just trying to save money. Meanwhile, inside that savings plan, there's a life cover embedded into it. So you are just saying, I want to save 10K every month, right? Uh, in 5 years. 5 times 12, 60K times 5 again, that's 300K, right? Is that computation correct? Okay. However, you are saving, you can also elect to say, God forbid something happens to me, I want you to pay my beneficiary the total amount I have saved
Yeah.
and a life cover of say 1 million. So in the event that the person dies, what you have saved and 1 million is paid to the beneficiary. Now there's a premium that will be deducted from the 10K you are paying every month.
To go
Insignificant,
towards that.
going towards the life cover.
Okay.
So some organizations have devised a way to embed life cover into saving. So rather than going to bank to say I want to open a fixed deposit account, right? I just want to keep money there. It's better you do it with an insurance company, really, so that there are, of course, you get interest just like the bank would give you, but there are additional benefits you can't get in the bank, like insurance, life insurance. Everybody hates the idea of dying. Even me, I don't want to die, but it happens.
It will happen to everybody.
It happens unknowingly. Nobody plans that. Oh, tomorrow I'm going to die. Nobody, but people will still die today and then tomorrow, and just like that, right? So I don't know if that answers this question that you've asked.
It did. So, we've come to the end, but there's
Oh, really?
a closing tradition we have on the podcast where you leave a life advice in our book. So you won't say it out loud, but you write it
Okay,
down.
that's cool.
Thank you very much.
Not a problem.